Good morning, good evening, and good afternoon. Hope everybody's having a great day. We got a little extra Tom Gentile coming to you today in 5, 4, 3, 2.
Hey guys, welcome to our Rocket Wealth Initiative live stream. This is Wednesday, March 30, just after 1 o'clock. Glad to have you hanging out here in the room. If you are a Rocket Wealth Initiative client, all right, if you're one of our members, do me a favor, okay? I want you to log out of the premium room, which we open up for the beginning of the show for everybody. And I want you to log back into the room that says Tom Gentile's Rocket Wealth Initiative. That's where I am. That's where Jeff is. That's where we're going to be answering your questions. If you have them, feel free, because that's our little room right there, all of us. Come on in and join me. I just text that I'm here and ready to go. You'll know you're in the right room if you see down there down there at the bottom of the text messaging, you'll see me texting out there. I'm here ready to go. So I'm just waiting on you to come on in. All right. So that being said, let's start off with this. Okay. So this was an alert that went out to all of you who are Rocket Wealth members. We have a little bit of work to do today. If you didn't already do it, if you did do it, then you're already taken care of, because all of these positions, by the way we're looking at them, got filled. So this came off of our open positions. As you can see, we are closing up our Apple April 14th 150 puts. 93% profit potential out of taking the entire amount, right? 14 cents, done. Buy to close, Microsoft, April 14th, 255 put, 14 cents, done. That's a 96% trade. Buy to close, Callon Petroleum, April 14th, 37 put, 20 cents, done. 93% of the maximum reward possible. And finally, buy to close the OIH ETF, that's the VanEck Vectors Oil Services. That's the April 14th. 181 put. And we're doing that for 15 cents or better. And that was also done. 95% of the capital. So these are coming out of our open position category. And let me show you the open positions. Here they are. That's not what I wanted to show you. I wanted to show you the open positions. I knew there was something I was missing. Ryan, you're out there in option land.
Yep.
Show everybody the current open positions.
You got it.
So let me get out of mine so I can see you. There you go. That's what I wanted to show you. If you look there, that's the close positions, Ryan. So that's
I have the one.
Yep. That's quite all right, because I think I can accommodate. Let me find my open positions, because I have them here somewhere, and I'm actually just going to do a little bit of homework here. Something I wanted to do like 1 minute before we started, and I missed it. And there we go. It just, time got away from me. But here is open recommendations. Okay. So the reason I brought this up, I want to show this to you, and I'm not going to spend a whole lot of time on this because Jeff's going to come in here and detail this for me. But if you were looking at what we were just talking about, okay, let me back up a second. Apple, the 150 put, okay. Here's Apple right down here, 150 put. And there's that 14 cents. Okay, so that's going to come off the open position sheet. And the next one is Microsoft, the 255 puts. So the 255 puts, and you know what? I'm going to blow this up so everybody can see it. There's the Apple trade coming off. There's the Microsoft trade right up here, line number 2. That is now coming off. Okay. There's the OIH trade. That's coming off. That's line number 4. And then finally, the Callon trade. That's CPE. The 37 put, let me back up and show you that one. Callum Petroleum CPE 37 put. And there it is, line number one. That was coming off at 20 cents or better. That got hit for 20 cents. So all of those, 4 of those trades on our open positions are no more, no mas. They're now getting rotated over to the closed position sheet. Again, I'm going to let Jeff talk a little bit about this in more detail. What I want to talk about is how we find these trades for those of you that are brand new. Who in the room is a brand new Rocket Wealth member? Who's been here for, and I consider brand new to be the last, oh goodness, I want to say you got to have been here a month or less. Who's been here in the last month? All right, looking for you right now. So, all right, cool. So we got a few brand new folks in the room. So here's the thing. Our brand new folks, you probably kind of trying to get an idea of how we do this, right? So how do we do this? What we do is we go in and we take a look at statistical probability. We take a look at, a lot of new members that I was just seeing. Member, me. Great, glad to have you here, guys. You're gonna love this. This is long term. This is a long term wealth creation. I like to call long-term wealth creation research service. And so you can see, for those of you new, we killed it in 2020. We killed it in 2021. 2022, first quarter's out of the way. I'm going to show you the closed positions before I turn this over to Jeff, but we're killing it in 2023, or 2022, excuse me. We're going to kill it in 2023. Anyway, what we do is we look for these first-class stocks. All right, we look at first-class stocks. We look at getting premium on those first-class stocks, above average premium. And we look at putting on these put option positions or put spreads, which Jeff's going to talk about later today, as he does every week. Put spreads with, typically we look for a 90%, okay? A 90% statistical probability of profit. Now, why can't you just roll the dice and do this yourself? Because what we do is we have some artificial intelligence that tells us where the best opportunities lie. And not only in just put price and not only in probability, but we have our own mathematical way of determining, based on put price and based on probability, which of those stack up to give us the net best potential gains. All right. Something we do a little bit differently. So, we do start talking about overall markets. We look at the overall markets. And if you look at the overall markets right now, I mentioned this at 11:30. Let's take a look at the SPY a couple of different ways. Number one, you can see the volatility is dropping. Volatility's dropped off quite a bit. Jeff and I and the rest of the team kind of believe that if you look at the implied volatility on the SPY, it's also the VIX is something that we look at as implied volatility. There's a long-running quote that goes like this: if the VIX is high, it's time to buy. If the VIX is low, it's time to go. VIX is getting low. VIX is getting low, and we still don't. I think we have not priced in Russia trying something new. We've not priced in the fact that inflation is going to definitely be a major cause of concern for the stock market. Okay. Rising interest rates. And it looks like they've kind of pushed that aside for now. Now I want to show you this one more way. Let's go look at a channel test on the SPY. Because if you look at the channel test and you look at the long, intermediate, short-term channels, we're coming up into an area of congestion. The area of congestion starts around 465 and goes to about 475. And there's a bunch of congestion zones right in here that are a cause of concern. So you can't just go out there and, with a strategy like this and just throw it out there. All right. Just throw it on out there. And remember, I'm going to get to your question before I turn this over to Jeff, because that's a fantastic question. I'll talk about both of those. Okay. Completely. Two entirely different research services. And I'm talking in terms of the strategy itself. I'll get back to that. But if you take a look here, you look at lowering volatility, We're coming into some headwind here. So you got to have something else other than what we like to call the cone analysis. The cone analysis is looking at charts and looking at them with probability cones. So here's a probability cone on the S&P. You know, the probability cone on the S&P basically gives us two cones, a blue cone and a red cone. The blue cone is an area that statistically the SPY going forward should stay in this cone, and it typically stays in this cone or is projected to stay in this cone with a projection factor of 68%. There's a 68% chance, all right, or 68% standard deviation that S&P is going to deviate up or down, but